Good morning. It is Sunday, August 25th, 2024. It is 11:32 a.m. on the East Coast, 9:32 Mountain Time, 8:32 West Coast time. I'm on the road. As you can see, the backdrop is a little different here this morning. I've been traveling for more than a week now out west. 3 different site visits, also just taking some vacation time, some days to do a little less, enjoying the nature out here. We'll talk a little bit about that later in this video, but there's a lot to get to today, as I'm sure you can see by the tabs up top. Again, before we get started, my name is Rob Sin at CEO Technician on X, at Goldfinger on CEO.z, and this is Goldfinger Capital on YouTube. I also have a Substack. Check it out. A lot of good content on here. You get really some of my best stuff on Substack, and there's a premium version where 2 or 3 times a month I publish a premium post. In the next week, I will publish a premium post about some of my travels out west. So in order to get that content when it's published, you will need to be a premium subscriber. It's $8 a month, pretty cheap. So please check that out, and grateful for all of my subscribers. I really appreciate all of you. So before we get to junior mining, there's a lot of macro to unpack this weekend. So Fed Chairman Powell, Jackson Hole speech was, by all accounts, extremely dovish. He really sounded concerned about the labor market. You know, you have to read between the lines with Fed speakers, especially a Fed chair, especially during a speech like Jackson Hole. I mean, this is once a year thing. The Fed chair, this is like their highlight of the year. This is their big monetary policy speech. So what the Fed chooses to say at this time when they have the world's attention is very important. And I wrote this Friday afternoon on my Substack, and I'll just highlight 3 quotes from his speech. I mean, you can click on the link and read the whole thing in its entirety, but he's citing a cooling labor market. He took a victory lap on inflation. He unpacked why inflation overshot in 2021 and 2022, how they've gotten it to come back down, how monetary policy is still very tight. Fed funds at 5.5 is restrictive. One of the other FOMC members, Bostic, was out early in the morning on Friday saying that he thinks the neutral rate is 3%. 3%. So we're 250 basis points tight at a time when inflation is back to target and at risk of undershooting, of overshooting to the downside. And the consumer, there's strong evidence the consumer is slowing and the labor market is deteriorating, right? So he says, Powell at Jackson Hole, we do not seek or welcome further cooling in labor market conditions. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will all depend on incoming data, the evolving outlook, and the balance of risk. We'll do everything we can to support a strong labor market as we make further progress towards price stability. So he is shifting clearly. Read between the lines there. As we make further progress toward price stability. So price stability is there. He's taking the victory lap. The now front and center is labor market. He does not welcome further cooling in labor market. Those who understand and interpret Fed speak, this is extremely dovish, and he is opening the door to cutting aggressively for the next year. Okay, and the market clearly understood it. The 2-year yield is at 3.92. So we're at 5.5 on Fed funds. Basically, if they cut at every meeting for the next year, they'll get to 3.5, I think. Yeah, either 3.75 or 3.5. That's kind of what the 2-year yield is pricing in. They're basically the market, the Treasury yield curve, the Fed fund futures are pricing in the next year, the next 12 months, the Fed will cut 200 basis points. That's basically what this yield curve and the yield on the 2-year Treasury is telling us today, because it's going to take them 12 months to get to 3.5. So this is the 2-year yield, and it's just under 4%. Okay, so clearly the Fed is way too tight right now, and they're probably going to front load the rate cuts with a 50 at some point in the next 3 meetings. So by the end of the year, there's probably going to be a 50, a 25, and a 25. So 100 basis points of cuts to get us down to 4.5 by year end. And the 2-year at under 4% is just telling you the Fed needs to cut 100 quickly to get in line with market expectations. Like they can't lollygag about this. And that's why I think they probably start off in September with 50 and give a very soothing statement that this is not a panic. They're gonna message this over the next few weeks, that they want to get closer to the neutral rate faster, and more likely they will gradually continue at 25 in subsequent meetings. It's not going to be like a 50-50-50 thing. It's not going to be like that. But I would say there's a better than 50% chance in my mind that the Fed goes 50 in September. Now, obviously, with what the stock market has done in the last few weeks, maybe there's less urgency to do 50. I mean, certainly 2 weeks ago with the carry trade stuff um, and more bad employment data, the services sector is starting to weaken. The manufacturing sector is clearly in recession. I think the market was pricing in a greater chance of 50 basis points in September. Now it's closer to a coin flip. Actually, I think the odds of 25 are actually now greater than 50, but I still think they go 50 in September, especially after his speech in Jackson Hole. The consumer is slowing. So I've just noticed that I'm noticing inflation has leveled out in the last couple months, just from my own expenses, my own spending, and airlines. So I in the last 3 years, I've been flying a lot, probably once every couple months at least, sometimes more. I remember late 2021, early 2022, like I couldn't get a flight anywhere for less than like $700. It was crazy. Well, I mean, now there's $200 tickets again. I didn't see any $200 flights, like nothing. I mean, maybe like bottom of the barrel Spirit or something, and then you have to pay another 150 to check your bag and get a drink and wipe your ass. They get you with all these add-ons. But like American or Delta or JetBlue, like there were no $200 tickets in 2021 and 2022. Now I'm getting offers for 199 round trip to wherever, Denver, or Dallas. This wasn't this is new. So airline tickets, based upon my experience as a consumer, are falling in 2024. In 2021, 2022, 2023, they did nothing but rise. The cost of travel got to be astronomical 1 year ago. Like if I wanted to go anywhere, I'm spending at least $1,000. At least. Hotel, airfare, God forbid, car rental, food. I mean, you're really talking more like 1,500 or 2,000 to get anywhere for a couple days, right? Like that's real talk. I feel like there's a little bit of deflation right now. Now, knock on wood, let's hope that, this lasts and this isn't just a temporary blip, but the consumer is slowing. And I view airline ticket prices as a leading indicator. I mean, the airlines are adjusting their flights, their schedules, their bookings, their prices, their advertising in real time. In real time. Like there's no better glimpse of the real economy and the free market at work than airline prices. So look at these trends. And this, yeah, like a year ago, airline ticket prices were up like 15, 20% in a year, right? And that's 3 years of increases. I mean, the airline ticket price increases from 2020 to 2023, you're talking about double. Like from my experience, you're talking about double. They doubled the prices. So now we're getting a little retrenchment. Maybe they're down 5 or 10% on average, but I feel like they're continuing to fall and they could fall further. Cruise lines, hotels, accommodations, Airbnb. I saw the quarter from Airbnb. They're having really slow bookings. So there is mounting evidence across the economy that the consumer is slowing and getting close to being tapped out. Couple that with Powell's extremely dovish speech here. The Fed is going to be they're going to try to act as cool as a cucumber, but they're going to have to cut a lot. I definitely expect they're going to end QT, so no more balance sheet, runoff. And maybe we'll get a little bit more of this stealth QE. Maybe they'll um, continue to um, flood with short-term T-bills. The Treasury will finance with 3-month stuff, three-month paper, because they know the Fed is going to get the Fed funds down to 3.5 by the middle of next year. Why refinance now at higher yields when a year from now they could refinance at significantly lower interest rates and lower cost, right? So I think we're going to continue to have the Fed and Treasury work together, sort of a stealth QE, and maybe we'll even get full QE. I mean, if the labor market cools further, if we get unemployment back up near 5% in the next, I don't know, 6, 8 months, maybe we'll get some real QE, right? So anyway, Jackson Hole, extremely dovish, super duper dovish. So we have this election. RFK endorsed Trump, yada, yada, yada. The election is now barely more than 2 months out. Okay. So in the US, football season is starting now. Election is kicking into full swing. This is the most contentious election of my lifetime, maybe in the history of the country. I don't know. I can't speak for 200 years ago, but with the media power today and all the different social media platforms and the way that the two parties can attack each other and spend all these millions and hundreds of millions of dollars trying to get their message out. This is a crazy next couple months in the US. And I don't want to talk about politics or which candidates are what or who I support. Some of you can probably guess, but this chart says it all. Like you can just take a look at this one chart. This is a divided country that's split almost evenly, 50-50, half the population against half the population. There's very few real moderates. I consider myself a moderate, actually, very much so. I have some liberal views. I have some more conservative views, but I consider myself to be an independent thinker and a moderate. There's not many of us left anymore. But look at you have the independents and the Republicans feel that inflation is above 3%, whereas the Democrats think inflation is 1.7%. I mean, the difference, between 1.7% inflation expectation and 3.8% is night and day. 3.8% as an annual inflation rate is high inflation, certainly higher than we've had over the last 20 or 30 years. And the effects that rate of inflation has on the economy, monetary policy are completely different than if the inflation is 1.7%, right? So you're living in terms of macroeconomics, you're living on two different planets. Like these two groups of people that are responding to this poll are living on two different planets. Yet they actually live in the same country, they might live in the same state, they might live in the same city, they might even be neighbors. But their view, the way their brain filters the world and interprets data and speaks, expresses, it's night and day, right? And this is why it's so contentious. The country is split and the two sides see things very differently. The differences are almost irreconcilable at this point. Okay, I really want to express that. It's irreconcilable differences, between the far left and the far right. They can't they can't see eye to eye. Maybe the only thing they could see eye to eye on is if the US was attacked by a foreign country, like in a military invasion, and then we would all be fighting to save each other's lives and save the country. It would have to be such a extreme event right now to bring this country together, right? And that's very sad. That's very sad. And that's also why I believe the next several months are very unpredictable. I got no predictions on how the turnout of the election, the result of the election, which parties are going to control the Senate, the House, the executive branch. We're in uncharted waters. Okay, we're in uncharted waters globally. We're in uncharted waters here in the United States of America. We're in uncharted waters in terms of the debt and the deficit. And actually, go back to my Substack. I'm not going to pull it up again, but I ended that Friday afternoon with two paragraphs basically saying with a $2 trillion annual deficit, with the prospect of a looming, recession, we've never been here before. To put it politely, I could say it in a bit different way, but to put it politely, we've never been here before. Nobody's been here before. Usually, when a recession begins, historically, consumers have stocked up huge savings during the good times. The government has been reducing deficits or maybe even running surpluses. We saw that in the late 90s with Clinton. And then the recession started in 2001, right? Recession 2007, 2008, the global financial crisis, right? There were some good times to help to cushion some of the bad times. Well, the last 3 years, the consumer has been spending like drunken sailors. The government has been spending at record, extraordinary, unprecedented levels for the last 5 years. The deficits are out of this world, mind blowing. And now the recession might start in the next 6 to 12 months, right? So this is uncharted territory in so many different realms, right? All right, enough of that because this video is already going to be super long. Howard Marks, I'm just going to say, read this. Good stuff. It's 9 pages, not terribly hard to read these 9 pages. He talks about Mr. Market and how markets often don't move on fundamentals. They move on feelings and positioning and inflicting pain upon over leveraged participants. It's not really fundamentals. Yes, in the long term, fundamentals assert themselves, but in the short term, just like we saw with this at the beginning of August, just mayhem can happen sometimes. And also sometimes stocks can rise for irrational reasons. I think we see that a lot too. V-bottom and big tech and video. Wow. Super strong. It's interesting how this had such a washout at the beginning of August, dropping under 100 for a few days and then rebounding so impressively. Well, they report earnings this Wednesday after the market close. Goldman Sachs upgraded NVIDIA last week. It's interesting, buy rating, but only a 135 price target. So I feel like, if NVIDIA's at 100 and Goldman says buy rating 135 price target, okay, well that's impactful. That's 35% upside. For a $3 trillion market cap company, 35% upside is pretty substantial. But if we're at 129.37 and they say 135 price target heading into earnings next week, I feel like this is set up again for a sell on the news event. Okay. I know that the last time they reported earnings in May, it was just off to the races, incredible, run, in the month following the earnings report. But I feel like we're starting to get up. Well, number one, just from technical analysis standpoint, look at this. Here's the all-time high. Here's a lower high, and here we are again testing up here in this 130 to 140 zone, key resistance zone, proven back in June and again last month. So the stage is set here. I don't even need to know anything about the company. I just know Goldman has a 135 price target. The stock has had a blistering 35% rally in the last 3 weeks. We're at resistance, proven over the last 2 months. Big resistance. Odds favor selling on the news, selling after the earnings report. I feel like it almost doesn't matter how good the earnings report is. At 135, people are going to sell, lock in gains. Let's see what happens. I have no position on NVIDIA heading into this week. Euro USD. So Powell, extraordinarily dovish. Signs of slowing, signs of cracks throughout the U.S. economy. Highly contentious, and political pandering season is in the works. Both the Democrats and the Republicans want to give away money that they don't have. They want to give away money from the future to buy votes. It's all negative for the dollar, right? The deficit, the debt, the political pandering, the fact that the Fed is going to have to cut 250 basis points by the end of next year, the fact that we could have the resumption of QE, and I could go on, and I could go on, and I could go on. It's all dollar negative. And this is, if there's one chart from last week that you just like, this is the controlling chart, this is the most important chart, it's this one, or it's the dollar index. The dollar broke down. The euro broke out against the dollar. The yen is breaking out against the dollar. So the dollar is declining because the market sees what's coming. The market is pricing in this Fed easing. The market is pricing in the potential chaos and uncertainty around the election. The dollar has major headwinds here. Okay, and I would not, if you zoom this out, like let's look at this 4-year weekly chart. I mean, look at the potential, okay, upside here. Obviously, 112 is a big level. Look to the left on the chart. But what if it gets past 112? Could it go to 116? Could it go to 118? Could it go to 120? Yes. Yes, yes, and yes. It's not going to go there tomorrow, but could it go there over 3, 4, 5 months? Yes. So I tend to not want to overthink this. Short the dollar, negative on the dollar, and whatever, long euro, long yen, but most importantly, long gold and silver. Um, Medical psychedelics. So I just got to talk about this quickly. MindMed, in my mind, is the leader in this sector now, this little biotech subsector, this obscure, opaque sector called medical psychedelics. Well, MindMed had a pretty good start to 2024, actually a great start to 2024, rising from $3 to over $10 a share. Well, now, since the FDA denied the MDMA approval, they, rejected it quite flatly, sent it back to the drawing board for another phase 3 trial. Well, so that's pushing that approval out another 2 or 3 years, possibly. Real sort of hiccup for this sector. And I feel like MindMed is sort of being painted with this broad brush of the sector, but really they only have one candidate, using MDMA, and it's in phase 1. It's not their lead candidate. Their lead candidate is lysergic acid, which is LSD for, depression, and they also going to use it for anxiety, both, um, for both indications, anxiety and depression. So their phase 3 is going to be focused on anxiety, and it's going to start in the next couple of months. Very big trial. The company is very well funded. I invite you to read the news they put out on August 13th. Um, I can't see anything wrong. And in fact, they just completed a financing at a $75 million financing at $7 a share. Now, some people might say, well, they've killed some of the upside with this financing, like they should have done it at a higher price or at a later date or whatever. Well, in this business where you have to fund a big phase 3 trial, you have a lot of corporate overhead, you take the money, and I don't think $7 is a terrible price. Well, now the company has over $300 million. So you got to add this $243 million that they had at the end of June with the $75 million they just raised. They have over $300 million in cash, a cash runway into 2027. So the fact they have $300 million right now and they have 2 to 3 years of cash runway, that puts the company in a position of immense strength. They're not subject to market conditions. They're not at the whim of investors' feelings on the company or the sector or the broader macro market environment, right? They're in a position of great strength. What's going on with this weakness? I mean, literally, it's down 40% in a month. Of course, this is biotech, this is medical psychedelics, so 20, 30, 40% moves are definitely not unheard of. In fact, they're quite common. It's a very volatile sector. Well, I think this is overdone here. Look to the left on the chart. It filled the gap from back in March. Um, I feel like it's oversold at this point. The market cap is down. I think it's almost down to 400 million at this point. So 300 million in cash with a 400 million market cap. And the best part is the shorts are all over this thing. For some reason, short sellers have congregated in MindMed. 36.7% short interest. So that's more than 1/3 of the float is held short. They don't think this company is going to, succeed in their phase 3, or they just think this company doesn't have enough catalysts in the near term and they can push the stock price around and cover their shares at a lower price. Well, they've done a good job in the last month, but maybe this is a setup for these shorts to get squeezed here. Maybe there's an unforeseen catalyst coming around the corner. I don't know. I'm long MindMed here. It's honestly one of my top trade ideas right now. So do your own DD, dig into it, um, share anything you learn, maybe ask me questions. I'd be interested to have conversations to anybody who's following medical psychedelics or MindMed. I am long here. And honestly, I see 50% upside potential by year end. And look, you could put a stop down around 540 or $5, all depending upon your risk tolerance or your position size. But I don't think you have to risk much from this level. I already think it's so oversold that it could turn around any day or week now. So that's my little pitch on MindMed. Um, Liquidity cycle. So this is also this is favoring precious metals in my estimation. Okay, and I just want to give you a quick glimpse of why. This is not a perfect indicator for precious metals by any means, but gold had a good run from 2009 to 2010. You can see the blue line. The two lines were both rising at that time. The long-term cycle was swinging up. We saw gold bottom in 2018, and have a pretty good 2019 and 2020, and then run into a speed bump in 2021 and 22, and you can see both of these lines were going down. Well, here we are. We're rising back up again. Gold is already above 2,500, and we're still in the swing of things here. I mean, looking at this, we got over a year left in the liquidity up cycle. Okay, looks good to me. Okay, looks good to me. I just want to throw this out there. And this is also kind of making a case for why it's so hard to short stocks, right? Like, it seemed like the market was getting cracked a few weeks ago and it rebounded aggressively, right? I think that when the liquidity cycle is expanding and central banks are easing and opening their monetary policy spigots, it's just a lot harder to bet on asset prices. No matter what you think about valuations or long-term earnings prospects, it's just a lot harder to be short. But I look at this from a precious metals investment standpoint and I say, wow, we've got some serious tailwinds here. Certainly for the rest of 2024, we've got tailwinds, right? Oil services, top sector to trade in 2024. I mean, just from a technical analysis standpoint, moving averages are flat. Actually, the OIH slightly trending lower. This chart's a freaking mess. It's an ugly mess. But from a value investment standpoint, I think you just trade the range, you buy low and you sell high. So support 295, 300, resistance 330, 340. I made the error in July of thinking that this could break out of the range and it was going to transition from an oscillation to an uptrend without significant evidence. I just kind of made that leap. TA mistake, got stopped out at the beginning of August during the downturn. It wasn't a huge loss. It was relatively minor. It was a flesh wound, but still frustrating because I had a profit and I let it turn into a loss. I never liked it. I don't think anybody likes their profits to turn into losses. So anyway, new moment, shake it off, let the chart set up again like it has for the last several weeks. Well, I think you buy it at the bottom of the range for a rebound. It could go up another 10%. And certainly with all the election mayhem and maybe Trump will take the lead again, I don't know. Drill baby drill could be a bullish setup for oil services. Schlumberger is like my number one pick in the sector. It's kind of the biggest, the best, the highest quality. Well, 43 is support, long-term support, major support. Chart isn't pretty, just like the OIH chart, but we got some green shoots. We got a MACD bullish crossover. Relative strength is trying to cross the median line. Let's see if it can get back above the 50-day moving average at 46. But I think you just trade the range. You buy it as low as you can, support, and then maybe take some profits up near 50, 49 or 50. Okay. So it's a big company. It's not super sexy, but it's trading at 11 times earnings. It pays like a 2.5% dividend, right? There's worse ideas out there. All right. We're moving along. We're moving along today. Precious metals. Okay. So gold, fourth consecutive weekly all-time high close. That comes after a multi-month consolidation that started in April, went until the end of last month, and we're just breaking out from that consolidation, right? So just pure TA trends, trend following, chart pattern analysis, bullish, bullish, bullish. So if you want to just keep it simple, stupid, keep it simple, right? And we would need to see a throwback and a close back under 2,400 to be like, oh shit, it's a failed breakout, panic. for right now, days like last Thursday, gold dropped $50. It hit 25.70, dropped down, I think it was 25.07 in the futures at the low. So pretty good shake, but it was a 24-hour shakeout. And we closed up near 25.50 again to end the week, right? So expect, especially when I show you this COT data, the commitment of traders futures data is very stretched now. We're starting to get into the extreme positioning where the commercials are short more than 300,000 contracts. The large speculators are long almost 300,000 contracts, right? But the thing is, sentiment is not extreme yet. It is bullish. This is a key distinction. Gold trader investor sentiment is bullish, but it's not extreme. It's not euphoric. Could it get euphoric next week? Yes, totally possible. More upside, people posting gold bars and their coins on social media. CNBC starts doing an hour-long special on gold. Sure, it could get euphoric quickly. But right now, sentiment is consistent with a bull market environment, a steady, gradual climb higher. Gold was only up 0.3% last week, $8. Right, so no biggie. Right, it's not extreme, crazy moves, but positioning. When we see the futures positioning start to get up these levels, you just know if the right catalyst comes along or just gets too extended to the upside, you could have a 2 or 3 day smackdown where gold, drops $100 over a few days. Totally possible. We have to be prepared for that, have an open mind to that. But when I look at just the trend, the technical structure, I look at the silver chart, weekly chart, the fact that it broke out, pulled back to the breakout level, and now it's turning back and resuming its uptrend in combination with fundamentals, monetary policy, pivoting to aggressive easing globally, government debt situation, global debt situation, global geopolitics, US election cycle, and I could go on and on and on, right? Bull market, bull market. The liquidity cycle chart I showed earlier, bull market, right? So we can always, in a bull market, we can always come up with fears as why it's going to end, why it could end. But the way real money is made is by trend following and just holding on, ignoring the noise, the worries, the tweets, people trying to call tops. That's not making any money. That's losing money and getting people to exit their winning trades too early. So just stick as hard as it might be for some, stick with the trend. This is a bull market chart. This is a bull market chart. Stick with the trend. And I believe with the liquidity cycle chart I showed earlier, if the Fed goes 50 in September, silver could have new 52-week highs in its future by year end. So I'm not one of these crazy guys who's like $100 silver in the next year. No, I mean, could it be possible? Yeah, it's possible, but it's highly unlikely. And I'm not even sure I want to see the world a year from now if silver's at $100. But could silver reach 35 by Christmas? Totally possible. Could silver retest its $50 all-time high next year? Yes, totally possible. Am I counting on it? Am I going leverage long call options to benefit from it? No. Am I holding physical silver? Yes. Am I long some silver mining stocks? Yes. Okay. I think that's enough on precious metals. But this chart really sums it up. The Fed has to finance the Treasury. The Fed has to pivot here. They have to pivot aggressively. Gold and silver win. Gold and silver win. And then look at the miners. I mean, I tweeted about this a couple times last week because I'd never seen this before in my life. Agnico Eagle, IM Gold, and Newmont, all three of them rallied 10 days in a row up until last Thursday. And on many of those days, they all three were making new 52-week highs in unison. Never seen it before. 10 sessions in a row, all three of these. So you got two majors, two seniors, and a mid-tier breaking out and just grinding higher every day. I mean, these aren't enormous moves. You know, Agnico went from 70 to 83. Okay, it's not even 20%, but that's in less than a month for a major. IM Gold went from 360 to 520. That's a pretty big move, but that's a mid-tier, so you get more beta, you get more leverage with the smaller market cap company that in theory gives you more torque to higher gold prices. And Newmont, of course, the biggest, went from 46 to 52. Okay. But investors are making money. Funds are slowly starting to gradually raise their exposure to the sector. And yet, the sector is still hated and well known for torching shareholder capital over the last decade. But it's from the torching of shareholder capital for a decade and bear market bottoms in 2023 and even earlier this year in February that the seeds of the bull are planted. The fertile soil for the bull are planted. The water gets sprayed on it, the monetary policy pivot, the macro fundamentals of geopolitics. We got a bull, baby. So ride the bull as long as you can stand it. All right. Final topics, junior miners and site visits. Thanks for sticking with me through all this stuff. Hope you guys get value out of this. And if you do, hit the like button and subscribe. Where am I? So this is where I was yesterday. Throw your comments in the video in the comments section to this video on YouTube. Where do you think I am? Can you guess the state? Maybe be more specific. This is where I was a few days ago. Arizona, copper country, south of Phoenix. This is Miami. So BHP, Rio Tinto, I think Capstone Copper is even in this area. Asarco is active in this area. The Resolution, deposit, biggest, highest grade copper porphyry in the U.S. is in this area near the town of Superior, Arizona. So here I am taking a picture in front of the Miami sign, I guess you could call it, in Arizona. I went to see Prismo Metals, so that's the topic for a later day. But Prismo has what you could call a resolution analog target. Okay, I want to be clear. It's not another resolution. It's not proven yet, but it's an analog. The setting, the geology, the rocks, the layers of the rocks, the age of the rocks, right? Just putting it in layman's speak. The setting, the target, it's a shallower target than resolution. It's not shallow, it's deep. It's 500 meters deep. Sort of the target area runs, let's say, from 500 meters to 1,000 meters deep. So it requires deep diamond drilling. Resolution, that ore body is 1,000 to 1,500 meters deep. So it's a resolution analog, similar setting, similar target, but it's a shallower version of it. And it needs to be drill tested. They need to put, let's say 5 1,000 meter core holes in there to either kill the target, where it doesn't give the joy that the company hoped for, and oh well, you lose the money that you spent on the drill program, and shareholders are unhappy, or they hit, like some 1% copper grades or maybe even higher. Like, who knows? It could be a skarn type setting, like Taylor deposit, also in Arizona, or Resolution has 1.5% average copper grades, right? And then that would be tremendous joy if they got some 100+ meter intervals of those grades. Then suddenly a company that's a 10 million market cap today could be worth a lot more. But company has to drill it in order to show it, to demonstrate it. Nobody's going to think you have anything close to resolution until you prove it with drill results, the truth machine. So I was there to get the lay of the land, to understand the setting, to hear from company management and technical advisors, and I'll unpack that more over the coming week. So that was my trip to Arizona. Now I'm in a different state, and I'll be heading home in a couple days. So I want to talk about 4 different news releases from last week, and then we'll wrap this up. You can enjoy the rest of your day. American Eagle Gold. So remember, I was at NAC about 7 weeks ago. Company was in the middle of a drill program. Well, they put out the results of the first 5 holes last week. There was this build up into the results. Clearly some level of anticipation, because remember, American Eagle ended their 2023 program with hole 17, which was 300+ meters of over 1% copper equivalent. That's an extraordinarily good porphyry, drill result. So the bar was higher. The bar was pretty high. The results they put out last week were not bad by any stretch. Okay. They announced 5 drill results, 5 different holes. 3, I think, were very good, quite good. One was, I would say, solid, so it was maybe around my expectation. And then one was maybe a downside surprise. And so that just shows you the fact that the stock dropped 25% on this news release just shows you how high the bar was. That they had 3 good holes. They had one, let's say, average hole, and one that was let's say, a small miss to the downside, a disappointment, of some sort. Uh, and this is the disappointment. So this was hole 2418. So in total, 816 meters of 0.25% copper equivalent. So that was the disappointing hole. Included in that was 25 meters of 2% copper equivalent, 12 meters of 1.43% copper equivalent, right? But overall, investors saw the broader intervals of less than 0.2% copper, and they sold. Okay, that's my interpretation. Okay, I know the CEO and other investors have different interpretations and rationale, but that's my interpretation. Is basically the market said we need 5 really good holes, and then we'll buy the stock. And they gave 3 really good holes. And this hole 18, the fact that the broader intervals were less than 0.2%, which most people interpret to be uneconomic, they just sold it and asked questions later, right? There's some controversy about the gold equivalent reporting, blah, 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 but you can still read the assay tables. You can look at the section maps, the plan maps. You can look at the drill core, right? There's nothing really bad about it, okay? It was, again, these are highlighted core images, so it's not the full, all the holes, but still, it's a lot of good looking rock at NAC. You can just go through this for days. This is beautiful looking rock. And some of it grades really high, like lots of stuff above 1%, even 2% copper equivalent. So I personally didn't think this was a bad news release. And I don't think the NAC story has been changed for the worse. But just like Howard Marks says, very often markets don't trade on fundamentals. It's, it could be expectations. It could just be someone was going to sell even if the results were good. They were going to use the higher trading volume on the news release to just exit their position because maybe they needed the money for something else, or they think they have a better idea. You just don't know. right? So we all want to make our interpretation, explain away all different kinds of market moves, but it just seems like the expectations were very high, and there was a segment of shareholders who were just waiting to sell, had their finger on, the trigger. I invite you to listen to this management team interview I did on X, which is now on my YouTube. It's 28 minutes long, and it's got the three key members: CEO Tony, Moreau, Charlie Gregg, technical advisor, and Neil Prouse, the lead geo for the project. And we dig into all of it. And if you listen to some of the sound bites and Charlie explaining his analog to Bruce Jack and why he loves hole 2424, and Neil loves hole 2430. I mean, I'm very encouraged. I'm quite encouraged, and I'm holding. Okay, I'm absolutely holding. Yeah, it's not fun to see the stock drop 25%, but remember, let's just zoom back here on the chart. This stock was under 10 cents at the beginning of 2023, right? Like I bought shares as low as 9 cents. So there's a lot of gains in here, and I think there's some people were just right on the trigger finger to sell at the first sign of anything that wasn't fantastic. And just honestly, hole 18 was not fantastic. I think it was a disappointment, but I think holes 19, 21, 23 were all excellent. But sometimes just the bar is too high, and I feel like that's what happens. Now, after this drop last week, I think expectations have been reset, and maybe the company is set up to deliver an upside surprise over the next few months. We will see. Dolly Varden Silver. So it's interesting how investors, shareholders in the junior mining sector typically just hate any financing, even though it's the nature of the business. These companies all need to finance in order to advance their projects and continue to run a company. But still, even when a company like Dolly Varden, that has continued to deliver great drill results, has a major mining company named Hecla as a 15% shareholder, has a guy named Eric Sprott, billionaire investor with a great track record, including Kirkland Lake Gold, as a big shareholder, and they raised $28 million Canadian with no warrants at $1 a share. You can look at the chart. It's not out of the 2-week high, but it's not far away. And people still don't like it, which is bizarre, right? Because you want your company, the company that you're a shareholder of, to raise capital from strong hands, from high visibility investors who have a following in the market, and who aren't going to turn around and dump it in 4 months. And that's what Dolly has done. A good portion of this financing is placed in strong hands. There's a flow through component, which I'm sure some of those shares will come back to the market, but the dilution is pretty reasonable here. Less than 10% dilution in total. $28 million gives them a lot of runway, room to expand this year's drill program if they choose to. And they're raising from a position of strength when silver is moving up and sentiment's a little more optimistic on the junior mining space. If they continue to put out those drill results, maybe we will get to new 52-week highs over the coming months. So I applaud Dolly for this financing. I think it was a great one. Hercules Silver. This company put out a news release on Monday. They got their Forest Service permits. You can just look at the maps they provided. Here's the state land. All right, this is a portion of their state claims. And this is the Forest Service area, including Great Creek and Metheny and Big Cut, right? So now with the Forest Service permits, they can drill from Metheny. And actually, I think that they might use some of these pads over here, maybe 16, 18, 17, and drill to the west from Metheny and test this. There's a big untested area here. I mean, first of all, this area is untested. This area is untested. And you can see they're drilling hole 13 right now. This is the first hole ever into this area that I call the chargeability donut. And Metheny has never had a deep hole, right? So there's and also lightning. And actually, 13 is drilling the chargeability donut right now. Well, hole 14, I learned last week, is it's collared right here where the word lightning is, north of Camp Creek, and it's pointed, the drill is pointed north towards Metheny. So this one could be very interesting. I'm not going to, you can look at my previous videos. I talked about lightning on my Substack a week or two ago. So look at that, but I like this testing the lower plate, the Triassic plate over here to the east, because it's much shallower. And I think the drilling productivity is going to improve greatly in this area, right? We've had all this trouble in the upper plate rhyolite so far this season. Well, now I think that they've got it. They got the powerful RC rig coming very soon, and they're drilling in much better rock here in the Triassic plate to the east. So I think that the drill program is really going to speed up, and they got a good chance of reaching their 20,000 meter goal by the end of this year. But a good news release. Definitely dig into it, read the whole thing, and just notice like some of the nuggets here. Big cut. Scar and exposed surface with grades up to 21% copper, 4.5% gold. Gold. There's gold over there on the eastern fault block. So I call this area, there's like a fault running right here. So I call this area over here the eastern fault block, where lightning and Metheny and big cut are. Well, this area to the east, Triassic is either at surface or very close to surface over a large portion of this area. And they got gold. There's gold over there. So maybe there's some more pieces of the puzzle that are about to be unlocked here. All right. I love lightning. Just look at the bismuth in soils, the moly in soils. And as I said a week or so ago, I am very hopeful for hole 13 as well. I think this chargeability donut, this area right here is very intriguing, because the low to moderate chargeability signature could absolutely represent the potassic zone, flanked by philic alteration in the high chargeability, right? Like the shape is as you would want it to look in terms of a chargeability anomaly. All right. And maybe this fault block to the east has been upthrown, right? So that's why the copper is showing up at surface. It's been upthrown from deeper down in the porphyry system. But the fault is like running like this. So this is to the west of the fault, where the potassic core could be preserved at depth. Okay, so that's my interpretation. Fingers crossed. And I just canceled out the chart. I exited out, but double bottom confirmed. I don't know why it was up big on Friday, but it was. So money is flowing back into Hercules here as the junior mining sector starting to see some inflows. We're starting to see sentiment improve just modestly in the juniors. And maybe it will continue to improve in the next few weeks into the Beaver Creek. We got conference season starting in mid-September. I'll be at Beaver Creek. I'll be at MIF in Vancouver at the end of September. Final topic, Pacific Ridge Exploration, PEX, PEX on the venture. So obviously I'm a shareholder of all of these. I'm talking my book. Pacific Ridge is a sponsor, Goldfinger Capital. So I saved the best for last. But seriously, this stock has been beaten up along with a lot of other juniors in 2024. It was at 14 cents in early April. Big shareholder dumped in May, as you can see here. Knocked it all the way down to 6 cents, and it's just kind of been trying to pick itself up the mat here. 5 cents as of Friday's close, but it was clearly that big seller, really took the wind out of the sails in May. Well, a lot of things happening with Pacific Ridge. They did a ZTEM and MT survey on their flagship project, Porphyry. This is a Porphyry Explorer, okay, just BC Porphyry Explorer, a set of Porphyry projects in BC. They did ZTEM. They're doing IP on another Porphyry project called Redton. And the big news, drilling underway at Chuchi. So this is the third project that has had news flow in the last couple of months. Chuchi, maiden drill program for Pacific Ridge. And I'll leave you to read the news release and dig into it as you wish. But just sort of the key high level highlights for me is this project was drilled late 80s, early 90s. Very shallow drilling. You can see the deepest hole is like 250 meters. And the grades are pretty good for a BC porphyry. So getting like 0.3% copper and 0.3 grams per ton gold, shallow, so less than 200 meters deep, that's pretty good. That's pretty good. But you can look at where's the maps? So you can look at some of this drilling, and so the blue holes are the plan holes by PEX. The other ones that showing the grade shells, the white and red, the red being above 0.2% copper equivalent. It's all pretty shallow drilling. In fact, some of the stuff over here from 1990, they were just all focused in one little 250 meter area, and it was all super shallow drilling. And also notice all the drilling was sort of from east to west, right? It was all angled this way. All the historic operators this way. Well, notice Pacific Ridge has a different interpretation. They're drilling the other way in 4 of the 6 planned holes. And hole 1, it's going to be about 500, maybe. Again, with all of these, they're planning 500 meter holes, but they could extend them based upon, if they're still in min, they'll extend them. If they're not in min, they'll cut them off, move on to the next one, most likely. But they're planning 500 meter holes, and this is testing an area depth that's never been drilled. You can see this hole ended in mineralization. This one ended in mineralization in this higher chargeability target area, and they're testing an undrilled area in this anomaly at depth. So hole 1, very interested in hole 1. And then they're just going to continue stepping out along strike and continuing to extend some of these, historic holes, right? A lot of them, like this one, ended in mineralization. This one ended in mineralization. I mean, when the hole is ending in 0.2 or 0.3% copper, and you're only 250 meters deep, in porphyry deposit generally warrants going deeper, because often the core of the system, the higher grade, is going to be at depth. And you can look at the magnetics. I mean, like pretty big mag anomaly, right? The chargeability, like they've got it all. It's a very thorough news release. And Chuchi is a promising porphyry project. It's a promising target, and it's not going to blow. It's not going to bust the bank, right? So this is all road accessible. So the cost of this drill program is going to be, I would estimate, about 1 to 1.5 million in total, which is not terrible to get 3,000 meters of core drilling done. And this, at this market cap, at this valuation for PEX, there is definitely some potential upside if they can drill some 0.3, 0.4% copper holes over good intervals. I mean, especially if they can do some like 200 to 300 meter, some broader intercepts with good economic grades like 0.3% copper. I think this could definitely get some attention. Okay. So 5 cents a share. I think it's a 6 or 7 million market cap in Canada. It's pretty cheap. So that's it for this week. We did a lot, got to a lot. Again, thank you so much for being a viewer, hopefully a subscriber. Please check out my Substack. Follow me on X at CEO Technician, on co.ce at Goldfinger, and enjoy the rest of your weekend and have a powerful trading week.